Hello, hello everyone. I have to talk about the future, and as macroeconomists tend to know, making forecasts is complicated, especially in the current setup. 3 years ago, COVID was not in the forecast. Beginning of this year, the geopolitical situation was not in the forecast. So before talking about the future, I will step back a little bit and look at the past to explain which direction we will take. So first, I will talk about gold. Gold as a store of value at first, and then even in some situation as a medium of exchange. This is just sociology, anthropology. People tend to associate value with gold because of culture. It has been like that for centuries. Gold is a precious metal, it's rare, but beside that, there was no objective reason to choose that metal. And gold became quite important. It was independent of the state. And the first coins were actually minted with precious metal. And then governments tried to regulate that. They regulated the use of gold to make sure that they could keep control on the monetary system. So the second step is to have banknotes. And banknotes to simply buy stuff, and you could exchange your banknote against gold, precious metal, still the same system. The only difference with that is that in 1971, Richard Nixon decided to end the gold exchange standard. And the value of currency only remained because people believed in the currency. So no tie with nature. The only tie with the real economy was because of the link between fiscal policy and monetary policy. So money became really distant to natural resources, and people started to invest in the different currency because they believed in it. Now I will make the link between the currency and the web. First, it all started with Web 1, as we call it retrospectively. It started in the 90s, and it was a bit wild at first, a bit speculative. Some people remember the dot-com bubble, and some people even compare the situation of Web 1 with the current situation of crypto. A lot of buzz, some scams at time, but the web is still there, and the situation of the Web 1 was access to information. So just after, at the same, it doesn't, next slide, because it, okay, so next is the launch of Euro, which also came around the same time. And one important particularity of Euro, it's that it started in its digital form first. Euro was first used by financial institution, and only financial institution, to make electronic transfer between banks, to make a transaction with the European Central Bank 2 years before it was used by citizens. So 2 years after, people started to get banknotes and coins, and the launch of digital euros, in fact. They could also pay electronically if they wanted. They could use a Visa card to make an electronic payment, but all the electronic payments were always tied to the intervention of a financial intermediary. So if we go back to the web and the evolution of the web at that time, it was the emergence of Web 2. Web 2, it's user-generated content, like you see on YouTube, on Facebook. The web page were not static anymore, except this one, but people could get a share of it. It's taken from the $1 million homepage, and it shows that now the people were actually featuring the content, sharing the data, and the other big trend on the internet at that time was the rise of e-commerce. You could buy and sell stuff online, and this is important. The difficulty there is that if you had to pay for something online, you could do it only using bank intermediaries or PayPal or things like that. Or else you had to meet that person, the seller in person and pay with cash, but there was no way to make a full transaction online without intermediaries. So next we have the Great Recession, collapse of the financial system. And I think you all know about it, but it has put the central bank in a very difficult situation, completely unprecedented. So it's in that context that a guy, a pseudonym, Satoshi Nakamoto launched the Bitcoin, and that's what you want to hear here. Two use cases he was trying to address. One is an alternative to central bank that did not prevent the financial crisis that took place a few weeks earlier. And second, a means of payment, peer-to-peer, to facilitate e-commerce, digital commerce. So the Bitcoin started to get adopted, first by cypherpunk, which were passionate about the autonomy, the freedom, and the privacy it gave rise to, but also the first stage of adoption, of the technology adoption lifecycle curve. Then at the same time, the European Central Bank was trying to address the situation of the financial crisis. Important thing to note, I mean, they started to use unconventional measures like negative interest rates, withdrawal of the 500 euro notes, important to mention, and also the TLTROs. TLTROs are specific interest rates offered to banks that lend money to SME. In fact, it's quite close to fiscal policy. So the focus of European Central Banker was to find alternative to traditional fiscal policy tools. So the situation in different countries didn't improve a lot. Even Greece, for instance, was harshly hit and had to find alternatives. There was capital control imposed, and cryptocurrency were used as an alternative for the citizen to escape those capital controls. So next is the Web3. Web3 is the Internet of Value, and it further fueled the Bitcoin adoption. We have more and more cryptocurrencies that are launched nearly weekly, and it comes I go a bit faster. It comes still in competition with what the European Central Bank is trying to do with TIPS. The European Central Bank is actually launched a system for instant payment. They are actually controlling the pipe with which you can, for instance, pay using a QR code. And also controlling the pipe with which you do instant bank transfer. So it's a kind of a foundation, cornerstone for the digital euro. So, and on the crypto side, you had the adoption of Bitcoin as a legal tender in Salvador. This is not a point of detail. Lawyers defined crypto as a non-sovereign currency, and suddenly all the legal definition used by IMF and so on were vanished because of the decision of Salvador. So now what will be next is that we see that every time crypto was making progress, central bank tried to react. And then when central bank take more control, cryptocurrency, in contrast, will try to offer alternatives. So it's kind of a two-sided system in which every dancer plays a part. And we start to see, like last week was announced by KBC that they were launching their own digital coin to have, which is based on the blockchain technology and enable smart contract. We see that private banks themselves as bridging the gap between what is offered by central bank and what the central bank are offering. So we have the start of the convergence of the two worlds taking place, and the crypto will always position themselves as an alternative to central bank. So there was a little time. I had to simplify a bit, but if you have questions on the role played by the two institutions, feel free to talk to me during the break, and I will be happy to address your questions. Thank you.